Hey, stock market sharks, this is Steve, your fellow stock market shark. And today I'm bringing some very important updates on BAKKT holding. Just look at the screen, guys. Just look at the screen and tell me what you see. Tell me what you see. What's going on? What's going on with BAKKT holdings? What happened to the stock price? So as you see, we are deeply in red today. The stock registered more than 8% loss by now, and the trading session is not yet over. It's probably getting more by the end of the day. The trading started around 7-8% losses. Then the stock has bounced back and registers losses around 2-3%, and then started to sink deeper. And now we are at more than 8%. So as you can see on the screen, the stock has been basically sinking since the last couple of trading sessions. The rally before that, the rally that preceded basically this correction was just crazy, was just very extreme. So the stock started to crack back, and this was reinforced by the earnings report. There is some disappointment on the market about the numbers, and I'm going to explain you what might be the main reason of this disappointment. So let's take a closer look at the report. Let's get started. Let's dive into it, and let's try to understand what's going on with BAKKT holdings. So let's take a closer look at the financial highlights. The top line, the net revenue, came in at 9.1 million USDs. That represents a 38% growth compared to the 6.6 million USDs registered in the third quarter of 2020. That is quite considerable increase at first sight, but I think that the market expected more, and I will explain you why. I think that the numbers presented by the company's management in the presentation for the investors earlier this year were reflecting a much higher hope for the upcoming quarters, a much higher growth rate. And this number, this 38% growth rate, was way below them. And probably this is one of the reasons behind the market's disappointment. But more importantly, the operating expenses came in at 39 million USDs. This represents an increase of 60% compared to the third quarter of 2020, primarily due to investments in business growth and closing some transactions. And that is totally normal. So that is totally normal that a young company in its early growth stage invests heavily in the future, and it generates losses. It generates losses to get out more revenue, of the market in the future. So that's pretty normal, and that's pretty acceptable. What the market would like to see, and what myself would like to see, is a pattern of decreasing expenses, a trend of this decreasing expenses, and this hasn't happened this time. So the operating expenses were registering a huge increase, and that raises some concerns whether the company would be able to achieve profitability at that stage when the management projected it in 2023, and if the growth rates would be as high as they were projected earlier this year by the company's management. So more on that later. Right now, let's take a look at the adjusted EBITDA, and that was basically 24.1 million USDs compared to a loss of 12.3 million USDs 1 year ago, and the net loss was 28.8 million USDs compared to a net loss of 18 million in the third quarter of 2020. So the net loss increased by more than 10 million USDs. That is a quite considerable increase. And now I want to reflect on these numbers a little bit more. So this is what you can see, guys, in the company projection, the presentation for the investors that was published earlier last year, and probably this was used by many around the IPO to determine the value of the company. Here you can see some very massive numbers in terms of the revenue projected for the next 5 years, and also some very considerable growth rates. There is some variability in the growth rates. For instance, for the second year, the management projected a growth in the revenue of more than 200%. And then for the third year, it's only 55%. But if we average these out, we would get something around 60%. So a 60% growth rate on average for the next 5 years. Also, the adjusted EBITDA is projected to increase by 60% year over year in the next 5 years. And what do we see eventually? What are the facts? What are the reported numbers? Are they in line with these projections? Let's take a look at them. So the revenue reported once again for the third quarter was 9.1 million USDs. If we multiply this by 4 to annualize this revenue, we would receive something around 36 million USDs. So let's compare this number, 36 million, to the projection for the first year. It's almost 900 million. 900 million. Guys, I'll give you a minute to assess the difference. So 36 million versus 900 million. How far are we from 900? Extremely far, I must say, extremely far. So that's one of the problems with the report. The second problem is, as you can see, the growth rate, it's 38%. The projections, from the projections, we could have deduced, or the investors could have deduced, a totally different, a much higher growth rate, around 60%. But this is also like a little bit more than half of the projected growth rate. Of course, the growth can pick up in the next quarters, but the valuation of the company is quite stretched. So we would like to see some facts that support the idea that the growth rate can pick up in the next quarters. And this hasn't happened this time. So both of these aspects, I think they represent a considerable disappointment to the market. Let's break down the revenue a little bit more. So we can see that eventually, the revenue can be broken down on transaction revenue and subscription and service revenue. The transaction revenue came in at a quite good level. So we can see a year-on-year increase of 133%. That's pretty good. So that's pretty good. So in this regards, I think that we can be satisfied. But subscription and service revenue was very low, around 80% increase year-on-year compared to the third quarter of 2020. And this averaged out the entire revenue growth. So there is room, there is some room for BAKKT to basically pick up in terms of subscription and service revenue. But that's quite promising that the transactions are growing, because that is a very important indicator for the company's future prospects. And another important indicator is the number of transacting accounts. We can see a number of 1.7 million in the first 3 quarters of 2021. And as you can see, there is not a huge growth dynamic compared to the previous quarters. And here also in this regards, I would have liked to see something more impressive, some higher growth rate, some higher dynamics, basically just supporting the idea that the company is picking up in terms of the transacting accounts. This hasn't happened yet. Of course, that the market, the potential market is huge, as it was just highlighted. It's around, taking into account the network of the company, it's around 100 million users. So there's a huge room for improvement to reach that number. But this is still just a potential and has to become real. So the company has to work on it very heavily to turn this potential into reality. Okay, so these were numbers in general, and now we'd like to just give you a quick evaluation guide on how much might the company be worth. So I'm going to use a method that is basically a relative valuation method, and I'm going to take the first year when the company is projected to produce positive earnings, and I'm going to multiply the data from that year with a suitable multiple, market multiple, and basically that's how I want to reach. That's how I want to get a fair value for the shareholders. So let's take a look at once again the projections. The first year when the company is projected to generate positive earnings, the first year is the third year, 2023. So what I would do is just take this EBITDA number, 111 million USDs, and I'm going to use that for the calculation. Calculate from there the earnings, and basically picking the right multiple, we can value the company, we can value we can get the intrinsic value of the shares. So going back to the spreadsheet, in the top row you can see the adjusted EBITDA taken from the management projections. The amortization, this is basically accessible in the earnings report. It's around 3 million USDs. I don't expect a huge difference in there in the future either, because basically this is not a capital heavy company. So I expect that it's going to be quite constant. This is per quarter value, so I have to multiply it by 4. It's going to be 12 million USDs. The adjusted EBITDA is basically can be calculated from these two values. It's 99 million USDs. The interest expenses, as reported in the earnings report, are 0.1 million USDs. This has to be multiplied by 4 as well, because this is a quarterly value as well. So it's going to be around 0.4 on a yearly basis. The tax rate for calculating the earnings is the usual 21%. So the earnings are calculated at 77 million USDs. The number of shares outstanding is 50 million. This data is taken from Yahoo Finance. So we can get from here the earnings per share by dividing the earnings with the number of shares outstanding. So we get here the earnings per share is 1.5 USDs, and then we have to select a suitable multiple to multiply this earnings per share with the price per unit of earnings that can be basically noticed, that can be identified in the current market valuations. So what we need here, so this is the EPS for the company, 1.5, and then we have to pick a multiplier used from the market valuation of similar companies and use that multiplier to get to the intrinsic value of a share. So basically what I'm using here is 25.4. This is the price per earnings ratio for Coinbase. As you know, Coinbase is a company that is very similar to BAKKT Holding. So I consider it as a competitor basically, and as it stays so similar to BAKKT, I think it makes sense to use Coinbase's price per earnings ratio as a multiplier to get to the intrinsic value of BAKKT shares as well. So by multiplying these two numbers, I get the intrinsic value for a BAKKT Holding stock in 2023. As I mentioned earlier, this calculation would reflect the company's value in 2023, because that's the first year when the company produces some positive earnings. And from there, we have to deduce the present value of this intrinsic value that would apply to 2023. Because basically, $1 today is not the same as $1 3 years later or 2 years later. So we have to apply a discount rate, and that is basically suitable for converting a value in the future into a value in the present. So basically, I'm going to use a 6% discount rate. This can be calculated by different methods, and basically these calculations are available on the different websites, and these are quite specific to the industry. So intrinsic value in the present of a stock, of a BAKKT stock, would be 35 USDs. So 35 USDs. But usually I apply a margin of safety here. And as this is a very young company, and as you can see, the current numbers in the earnings report are not heavily supporting the idea that this company will definitely turn profitable in 2023, and they are not definitely supporting the idea that those numbers that were shared in the projections of the management will reflect reality in the end. So there is some risk around that, and in order to reflect that risk, I want to build in a discount into the pricing of the BAKKT stocks. I want to build in a margin of safety, and I'm quite conservative in this regard. So when we are talking about young companies, companies in their early growth stage, basically the track of the company can be significantly different compared to what we imagine. So it always makes sense to build in some kind of margin of safety. In this case, I would apply a 50% margin of safety. So applying this, I would reach a fair price per share of 17 USDs, 17 USDs. So that's what I consider to be the share price of the company. That's what I would give for a BAKKT stock at the moment. So that's it, guys. This was my review of the BAKKT Holdings earnings report. These were my thoughts about the stock price. I leave you with that, guys. And just to summarize, I'm not saying that the stock looks totally crappy at the moment. I'm not saying that you should definitely dump the stock. I'm just saying that with my appetite for risk and with my trading strategy, the stock at the current price level is a sale. It's a definite sale. I'm waiting for better entry points. I'm waiting for lower prices that basically would incorporate that risk that I see in terms of the company realizing its plan for the future, in terms of the company realizing its projected growth trajectory. So there is where I see quite significant risk, and that's why I'm calculating with a quite considerable margin of safety. But of course, for those of you who are basically have a larger appetite for risk, who like more speculative investments, even the current price levels can be reasonable. So just for instance, let's say someone doesn't want to build in a margin of safety. He or she would like to take the risk of the company, larger risk of the company not meeting its projections. And let's see what this approach would give us. So let's say margin of safety is 0%, and in this case, eventually the intrinsic value of the intrinsic present value of a share would be around 35 USDs. Basically, this includes a considerable upside compared to the current prices, more than 50% upside. But this is basically for someone who just calculates with the best case scenario. So it all ties back to what you believe in, guys. What kind of margin of safety do you require? What do you believe about the prospects of the company? So based on my inputs, do your own research, do your own analysis, think about it once again. Think about what is your risk preference, what is your risk appetite, what trading strategy fits you. And of course, you can play around with the amount of capital as well that you invest in this stock. So for instance, if someone who is allocating part of its portfolio to more speculative investments, then this can be also a good play at the current price levels. With that, I leave you guys here, and thanks you all for watching. And before I say goodbye to you, once again, the usual ask, please don't forget to subscribe down below. I really need the subs for my journey to continue and to grow the community, build a community behind this channel. So thank you all for watching. It was really a pleasure for me to have you guys here. I promise I will be back soon with some new videos on personal finance, investment, stock market analysis, fundamental and technical valuation of the most popular stocks. So I will be back. Till then, have a nice weekend and see you guys very soon. Take care. Bye-bye.